Imagine watching your savings sit idle while inflation quickly erodes their value year after year. What if the same money could work for you, grown through the power of compounding returns? In today's video, section 3 of our series will move from building savings to strategic investing, the step that separates financial survivors from genuine wealth creation. Welcome back. In section 1, we talked about starting where you're at, basically playing the cards in your hand. You have no choice. That is where you're at, and that's where you have to start. The main thing is to start today. Section 2, we're talking about saving money and some practical tips about saving money. And now we're in section 3, which is what we're going to do with that money we saved, is invest it. A quick disclaimer. I'm not a financial advisor. This is not financial advice. Do your own due diligence. All this information I give you is verifiable, but it will take some work. Don't be lazy in doing your own due diligence. Step 1, drop the myth that you need thousands of dollars to start. That's just not true. If you're a beginner, you just start micro. Today, apps let you buy fractional shares. That means if a single share of a massive tech company costs you $500, you can literally buy $5 worth of that. Now, the goal here isn't to get rich tomorrow, but it is to build the habit. If you can automate your app to automatically buy $10, $20 worth every time you get paid, whether it be in an ETF, which is considered safer, Bitcoin, or a stock, congratulations. You are an investor. So let's take a look at the actual cost of not investing. They say that inflation runs 2 to 3% a year. I disagree, but that's what they say. Sometimes it does run higher. Now, over the past 10 or 15 years, you may take a 30% haircut in your purchasing power. And over, as we've seen earlier, over 50 years, you're losing, 83% of your purchasing power. So you started saving in a bank account 50 years ago, my goodness, you need a day's pay just to go to McDonald's and get you a value meal. So now, on the other hand, 7, 8, 9, 10, depending where you're at, Bitcoin, Dell Computers lately, it's June 4th, 2026. Dell Computers did 100% in a short amount of time. Of course, you have to find those deals, but the point is that over the course of time, especially like the S&P 500, it has multiplied your income. So you can have your money in the bank, or you can have your money in investment. Can you lose money in investments? You sure can. Will you lose money in the bank? Well, absolutely. For casual investors, maintain a simple, balanced portfolio. Allocate it across stocks, bonds, cryptos, and perhaps real estate or international markets based on your risk tolerance and timeline. Now you have a baseline understanding, but you don't want to spend 40 hours a week looking at charts. DCA or dollar cost averaging is an option, and it is a very effective option, and it is the easiest option there is. And a lot of people choose this option because they don't have the time, they don't have the knowledge, and they believe that time in the market beats time in the market, which can be true, especially if you really suck at timing the market. Seasonal investors can add additional strategies like dividend stocks for growth, sectors of the market. You got healthcare, you've got bonds, you've got energy, you've got AI, which is pretty hot at the moment. You have cryptocurrencies, and so you got categories, subcategories. No matter what your experience level, the core principles are the same. Diversify, minimize your fees. Those fees add up tremendously over time. And maintain an emergency fund separate from your investments. And then review your investments quarterly. Don't do it daily because the emotional ride you might be on, especially if you can't do technical analysis, may be too much when you're really thinking about long term. Keep away from the short term. If you're finding this information helpful, please subscribe. It helps the algorithm, and give a like to the video and comment. Tell me, what is one investment step you plan to take this month? Or what holds you back from starting? Share it below. If you haven't watched already, make sure you check out the video about saving money right up here. So let's recap so far. In video 1, we talked about starting where you're at, basically playing the cards in your hand. Section 2, we're talking about saving money. And in this video, section 3, we're talking about investing. Thank you for watching, and I'll see you next time. Bye.